Hey everyone, today we are going to talk about different kinds of investments and why it's something that pretty much everyone can do right away and you don't have to be rich to get started. Although traditionally investing is connected with saving your money from what's left from your salary after of course you cut out your expenses, nowadays there are far more options that in the long term can make you more money than simply putting it in a savings account. So let's get started. Number one in our list is stocks. So, what exactly is a stock? A stock represents ownership in a company. When you buy one stock, then you are purchasing essentially a small piece of that company. Companies issue stocks as a way to raise capital. Usually it's for expansion, research and development, paying off debt, or various other reasons that they might need the money for. So, a stock is not just a number on a diagram. It's very essential for you to research that company you want to buy stocks from, follow its growth, and decide whether you would want to own that company at some point. If the answer is yes, then this is a very good starting point for you to start buying stocks from that specific company. The value of a stock is determined by supply and demand. If more people want to buy a specific stock than sell it, then the value usually goes up, and vice versa. There are various factors that can possibly influence the price of a stock. This can be the company's financial development, industry trends, economic conditions, or even investor sentiment. Historically, stocks have provided higher returns compared to other investments, like bonds or saving accounts. Think about it. Wealth is concentrated in companies. Then companies issue their stocks, and the owners make money from them either by selling them at a higher price, thus making a profit, or by collecting dividends, which are basically small parts of the profits that this specific company makes. Of course, not all companies provide dividends, but that's a matter for another time. Stocks are traded on stock exchanges, places where buyers and sellers can easily buy and sell different kinds of stocks. Some popular exchanges include the New York Stock Exchange, Nasdaq, or the London Stock Exchange. Of course, now there are many online apps where you can do the same kind of work much easier and much faster. Investing in stocks, of course, carries many risks. Past performance is not indicative of future results, and of course, there are no guarantees in the stock market. Stock prices can be very volatile, and their price can change very easily on market conditions. One of the biggest problems out there is that many let their emotions to get in their way. If a company performs poorly short term, even though in the long term it was doing very well, then people have the habit of getting scared, and thus they start selling their stocks at the wrong price at the wrong time, and as a result they lose a significant amount of their investment. And of course, this can also affect your own investments. Even though you're not one of the people that decided to sell right away, your stocks can get a direct hit from that decision. Let's go now to the second option, bonds. Bonds are basically loans that are given to different entities like companies or countries. When an entity wants to borrow money, then they issue a bond at a specific price right now and a specific selling price in the future. So for example, if you buy a bond right now for $100 and in 5 years from now you sell it for $110, then the $10 difference, that's your profit. So one of the key attractions that bonds provide to their investors is the relative safety compared to other kinds of investments. And they are very good for those who want a stable income or for reserving their capital. You know exactly how much you are going to collect and at what period of time. It's also very good that they operate independently from the stock market. Usually when the stock market fails, it doesn't mean that the bonds will be affected as well. However, it's important to note that one of the negatives that they have is that they offer a very low profit. Some of the safest bonds usually offer something from 3 to 4%. And of course, not all bonds are equally safe. Credit ratings provided by agencies like Moody's, for example, they offer insights of the creditworthiness of the bond issuer, helping investors to assess their risk levels. ETFs are third on our list. An ETF stands for Exchange Traded Fund, and it's basically a group of stocks that is based on an index, where index is the average market value of a specific sector in the economy. Traded in the stock exchange, just like stocks, They offer you the opportunity to buy a small portion of each of the stock that is provided by the specific group. So, you can buy an ETF that is based on a country's stock market index, or an index based on a specific sector of the economy, like I just said before, like energy, entertainment, heavy industry, real estate, and so on. The whole idea here is, instead of investing a lot of money on multiple stocks in hope that they might go well in the future and you make a very good profit, something that is very, very difficult for most people, you can invest a small amount in an ETF, and then your money is distributed equally on each of the stock that the specific ETF is made of. Some of the best ETFs out there are based on the S&P 500, that tracks the stock prices of 500 of the largest companies in the US. If, for example, you invest $500 in those ETFs, then $1 will go to each one of these 500 stocks in that specific ETF. The good thing about ETFs is that they have less costs involved than the regular stocks. It's mostly a passive kind of investment that can be made by pretty much anyone. And they have such a wide spread, which makes them quite safe. If a specific stock in the ETF that you buy doesn't perform very well, the rest of the stocks are going to counterbalance its value, thus making your losses minimal, something which is very ideal, I believe, for beginners. However, the con here is that the ETFs, like I said, are based on indexes. If an index doesn't perform very well, it's going to affect the ETF's price quite a lot. So if, for example, the S&P 500 goes down crashing, unfortunately the index based on that is not going to do very well. Usually what everyone advises in such occasions is to stay calm, don't make decisions on emotion and start selling out everything, because historically it is proven that the stock market is going to have its ups and downs. The game here is always long term. Let's go now to option number 4, real estate. Once it was thought that you had to be rich to enter real estate, you needed quite a bit of capital to start buying and developing properties, either for collecting rent in the future or reselling them for a very nice profit. And banks can be quite hard to secure a loan, because if you don't have your own capital, this is the next best option. Nowadays, of course, things have changed. There is a new entity that is based on real estate, and it's called REIT. It stands for Real Estate Investment Trust. A REIT basically is a company. They own and operate real estate. If, for example, they want to purchase a new property and they don't have the necessary capital to do that, they're going to start asking for money from different individuals. Someone like you, for example. You can invest as much as $1,000, for example, at first, and what you get for that is a portion of that specific REIT. Once the company has all the capital that they need to purchase the specific property, they go and do that. Then they develop it, and usually they use it for rent. It's the most common way to make money from it. Or in the future they might decide to sell it. So, how you make money from it? Once they collect the rent, the company keeps their own profit, and the rest is distributed equally to each of the investors depending on the initial investments that they have made. So, the bigger your initial investment, the bigger the profit you are going to make. In the future, if they decide to sell it, the same thing happens. The company is going to keep their part of their investment, and the rest is going to be distributed to the initial investors. The basic pro of this kind of investment is very passive. You don't need to have too much knowledge about real estate and not too much capital. Like I said, you can begin with as little as $1,000, for example, or even more if you have that ability. Without this meaning that you shouldn't do your own research and be very confident at what you are going to buy. The biggest negative about this is the fact that your money is going to be locked away for quite some time. It's very difficult to actually exit a specific REIT or resell your stocks, for example, to someone else. So that means that your investment, your money, is going to be locked away for too many years. And you have to wait until the whole thing makes its own circle, finish, and that's when you're going to exit. And this is an option for people who don't really want to bother too much with what happens to their investment, as long as they are making their profit every single month. So be careful about this kind of decision, because like I said, if you're very impatient, then it's not for you. So These were only a few basic types of investments that you can start right away with. We'll see more of them in the following videos, either for creating a passive kind of income or for increasing your own fortune. Like I said before, everything can happen online now. You simply download an app in your cell phone, for example, like I have, and start buying stocks or bonds or ETFs or whatever else you might need. But before we went, let me say that I'm not a financial advisor. Everything here is based on my own experience. It's not something that you have to follow just because I'm doing it. Make sure to make your own research first and be very diligent about where you are putting your money. Mistakes happen and it's quite easy to lose money out there. I have also lost money, but I have also made quite a few money from my own investments. Real estate, I have to say, is one of my favorite, but my most favorite is my own business that I run with my wife here in Greece. So, make sure to stick around, subscribe if you want, leave me a comment, and I'll see you next time. Bye.